Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys, I'm a little bit late, but we got initial jobless claims coming up, so let's just come over to the main screen right away here. By the way, that trade that I had yesterday, I had totally given up on it. It came all the way up here. We're still below that low that we were kind of looking at to maybe trigger downside momentum. We've come right back up to it, so that's kind of curious. We're sitting here just before the jobless claims. Consensus reading is 214K versus a previous reading of 210. So we'll get the numbers here in about 2 minutes. I guess I have a little bit of time to poke at the charts a bit. If I can find my chart, there we go. So here you can see the treasury is still just kind of, E-mini recovering a little bit. Oil coming off of its highs, but super good yesterday. Gold and silver still looking a great. Copper, oh man, copper ran yesterday. Bitcoin, probably need to go and take a look at a couple of others because there are a lot of futures in momentum right now, right? Gold is in momentum, oil is in momentum, copper is in momentum right now. E-mini, I guess you could kind of consider it to have been in momentum for a long time. The only one that's not is treasuries, and the treasuries are kind of testing the downside but not quite going. I kind of think that something has to give. I think that the markets are sniffing inflation, and the treasuries just haven't quite come along with it yet. Could be wrong. Market could be wrong, but that's what we're seeing right now, and I think it's worth noting, especially with copper coming along, because one of the things that's really key during our last inflationary spell was that China wasn't doing very well. But if we get an inflationary spell when China is doing well, then I think that you get a much bigger problem. All right, 15 seconds here. I forgot to turn my speakers off. All right. Okay, so it is not much, but it's 221 versus 214, so it's a little bit higher than expected. The treasuries aren't making a huge move off of that. In fact, if anything, they're moving up a little bit. Trade balance is negative 68.901 versus an expected negative 67. That seems to be hurting the dollar. It looks like the trade balance data is affecting things more than the jobless claims are at the moment. Well, I have a little bit of food, so I'm going to let this run. Let's see how this plays out. I'll turn the camera off and eat here a little bit.
Block sell.
Okay, that little movement to the downside, that's kind of a little bit more like what I would have expected given the numbers that we got out. So a little bit of a head fake, now some aggressive selling down here at the bottom of this. Hey, Lord Vader, you came back. Nice to see you again. So I'm doing my morning browsing here. The most interesting story I've come across so far. China has flooded the market with so many solar panels that people are using them as garden fencing. Okay. Wow. All right. Well, come back over here. I was, getting a little excited when we saw some of that downside, but we're letting them cook a little bit. And now we're kind of back up here close to that 24. I am getting the sense that there's maybe some defense being played at 24. Mackie B, that's me, says hello. How are you? That's a new name. That's an interesting name. That sounds like a DJ name or something. What is the... I all of a sudden am having a thought. I need to go and check on something, so I'll be right back. I muted myself. What have you got on market depth? What do you... I'm not quite sure what you mean. Are you talking about just what's on my screen here? Or are you talking about maybe some indicators that I've done? Or are you saying, do I have some videos about market depth? Because I think I do have one in one of those videos. Maybe it is the one about dictionaries. I kind of show you the on-market depth method. Oh, when Bart said no sun, he was saying the microphone wasn't on. I was like, is he talking about the eclipse? That's not till Monday. If I want to build a model that looks at the rate of change of order flow in the order book 5 levels. Ah. Okay, so you want to use the on-market depth method, right? And the way that it works is every time there is a change in the market depth, you will get an update. And that update will tell you which price level changed and what that price level is at now. So you want to have your own little dictionary or data structure of some sort that has a bucket for each price, and then you update the bucket at that price. Now, it does this kind of weird thing where, like, it tells you how many levels from the current price, and so you kind of have to like add and remove buckets. Like if we tick up, then you have to remove the best offer bucket and add a new best bid bucket. So that kind of makes it a little bit more complicated. But I think that NinjaTrader already has a sample out there that does that. So you can get around that part, right? Okay. Then you can basically do what you're talking about. And to do that, the next part is now you have to turn that somehow into a data series of some sort, right? So this is where you've got a bunch of decisions to make, right? Because it's a number that's constantly changing, right? So when you say the rate of change of order flow, you have to be more specific than that for starters, right? Because you could just say, what is the current market depth at that price level, and just update it every time or something like that. What is it at the end of that time period? That's what a lot of indicators on level 2 sort of stuff, they're telling you what it was at the end of that data period. But that might not necessarily tell you what you want to know, right? That's why my indicators, they kind of do a little bit of filtering. They look in and they see like the difference between the minimum that level to that level was, like what the minimum was and what the maximum was during that time, and the difference between them, to try and filter out people, constantly moving their orders around and stuff like that. But once you've gotten out the NinjaTrader's market depth kind of example, and if you understood the dictionary stuff, you'll figure it out. At that point, you'll start experimenting. You'll be like, oh, okay, what if we do this? What if we do this? You put it up. Let's see if it works. This is why when people want me to make indicators, I really, really try and encourage them to do it themselves, because developing something like that is like a very iterative process. Okay, back on the upside, and they are above 24. The overnight high, well, let's say not overnight high, but the last swing was 26, and we're kind of rising up towards it. I am getting a little hint of flattening here this morning. The 30-year is up a lot higher. S&P 500 seems to be taking off again. 10 points, but still, it's pretty good. Yeah. And if you have problems, you get stuck, you can come into the Discord. You can put a message in the Ninja script. You can tag me. Sometimes people post in Ninja script and I don't notice it. Here's somebody actually said something, and maybe But if you go in there and you like tag me, like you say my name, I'll see it a lot faster. Or you can just message me directly. I might not get to it right away. It used to be that if you messaged me, I would probably see it right away. These days I've been so busy. Like one of my favorite things to do, even though I am kind of have the market up on one of my screens. I have 3 screens. When I'm doing the day job, I will leave one screen with market information on it, so I can still monitor the markets. But I like to come in at the end of the day and like read Zero Hedge's synopsis of the market because sometimes they will notice interesting things. And these days I haven't had time to do it until like after my workout, like at 7-8 o'clock. So on day F chop and then a huge trend one. This is nice to see in the bull market. The S&P 500 seems a little volatile to me, you know? It's just kind of been all over the place, and when they buy it so heavily. And I'm kind of like, well, I don't know if like this over yet. Right? What happens if NonFarms tomorrow ends up being really good, for instance? And these longs in the S&P are going to get slaughtered. There are a lot of icebergs, that's true. Are you talking about in ES or are you talking about in the treasuries? Because overall, we have seen more icebergs than normal. ES, yeah. There was a time there in block sell, huh? Wait, that's interesting. So they went bid at 26.5 and somebody immediately sold 3,500 contracts. So there was like a really big market if touched order there. Probably a momentum trader, but that I don't think is going to predict very well what is going to happen, but may kind of be a hint that this is an area we want to pay attention to. Anyways, in the S&P 500, we went through a long period where it felt like you just didn't see icebergs at all. You know, it's only been more recently the icebergs have come back. In the treasuries, the icebergs have always been there, but, you know, they were certainly more sparse than they were. Now you see icebergs like at almost every price. So that's because it's kind of back to normal for the treasury. I'm gonna post a response to a thread here in Reddit here real quick. Okay, that resulted in quite a bit of upside there, actually. Very interesting. There wasn't anything in that news that I really felt was explicitly bullish for the treasuries. I'm not 100% sure what's driving that upside action, other than perhaps momentum strategies getting stopped out here. And the speed with which they came through like this 26 half area. Because again, it was like, remember, 26 half, they went bid, and there was immediately a large, market if touched order that pushed it back down. And now, since then, they've plowed up 4 ticks. That's pretty significant. And does kind of suggest stops to me. Well, the overnight high, that was like the local high. The overnight high is like 29 half. Maybe there is 29 half, but there's also 110 even is kind of going to be a pretty big magnet too, right? Like if somebody is buying and they're really buying a lot, right? There's going to be a lot of liquidity for them to buy at that 110 even area. Yeah, 17 ticks. Well, going back to like just before the news, the net change here is about 15-20k. Really big. That's actually a little bit less. That's a little bit more slippery than it's been lately, though. For as many ticks as because that's an 18 tick swing. There's only 1,000 net contracts per tick up is a little bit light. I kind of think. No? I don't know. I don't track it as like change in delta per change or per number of ticks as much. Someone really hammered selling those 3,500 contracts on ES. This whole rally is essentially that guy covering. I didn't notice that. Did somebody sell that much in ES? I hadn't seen anything of that sort. Well, there was. That is interesting. Yeah, there was a pretty big net sell in ES off of that news, and then we've gone higher. So there probably is somebody there getting squeezed. Here's the treasury, coming to that next kind of key spot, not slowing down in the least bit. I don't know, man. I think that there's probably got to be a little bit more behind this than just short covering, but I'm not sure what it is. It seems like the market is reacting to something. Perhaps, though, what they're reacting to is just kind of like the overall larger picture. That like the PMIs that we got yesterday are more significant than the move yesterday suggests. And so they're still trading it today or something like that, you know? That person had to short cover in this uptrend. Yeah, but there's been a lot more than 3,500 contracts in ES, right? Wow, I bet it's a big iceberg at 30. Well, Uzi's pointing that out too. This is exactly 8,700 too. And it's still going. I should be complaining about how I didn't jump on this and all of that sort of stuff, but I'm just kind of sitting looking at this thing in awe and complete surprise that it's doing this, you know? Yours says 8703. Really? But you know what probably happened to Uzi was some sell contracts got categorized as buy, right? Like the total volume that has traded. But here's what you're going to see. It is an interesting thing to me. Super pedantic sort of a thing, but I find it incredibly interesting, okay? The platform doesn't know exactly for sure what is a buy, what was a market buy, and what was a market sell. It only knows there was volume at this price. They are looking at the level 2 feed and what the best bid, best offer was at the time to categorize that volume as buy or sell volume. But those two feeds aren't exactly in sync. So if the level 2, if Uzi receives the level 2 update 200 milliseconds before I do, something like that, then some orders might be categorized differently, and then that's the difference. And it can be as high as 10% in some markets. Not the treasury, that would be hard to have happen in the treasury, but especially instruments that have a spread. There's a spread, and a lot of the contracts that are happen inside of that spread. Hard to categorize that volume as buy or sell. My Sierra has a special sound for orders above 1K during London and the RTH, and that thing went bonkers, really. Well, so, you know, interesting thing here, though. I haven't heard a lot of clicks. So let me pull my tape over here. About 10 minutes ago, when we were like at... there was like some bids at 18.5 canceling. Okay, like really far away. Well, the last big one that we had that was close was when it was at 23. So like the really, really large orders, really large limit orders are not really there in the treasury at the moment. Of course, there is decent liquidity, though. I'm going to just note that this was the 8,700. That seems significant to me. I do kind of think, though... Well, let's list some theories. Oh, you know what? I'm being silly. Almost forgot to come in and do our notes here. You know, I did these two things. Close. Initial jobless claims. Trade balance. Still toying with key momentum levels. Leftover flow from yesterday's PMI? Question mark. Microsoft Cloud Software Group will make 1.65 billion commitment to Microsoft Cloud and its generative AI capabilities. Microsoft under deal. Citrix will leverage Microsoft Azure as its preferred cloud solution. That order is also the highest net negative delta marker for London since July 2023. You're still talking about that ES one. Let me come over here. I just want to make sure that I'm not like missing something. Ulta shares tumble on beauty slowdown as consumers pull back. Statewide emergency declared in Indiana ahead of eclipse, as crowds of 100,000 to 200,000 are expected to come to the prime viewing area. Wow. Eric Wallerstein points out the jobless claims are the highest since January, remain very tight. Anthony Crudelli says that he's been watching ZN a lot because of correlations, apparently. Ah, he's right. Yeah, because the ES and the E-mini... Sorry, ES and ZN are highly correlated right now, or they have been somewhat correlated. Nick Timrose, one survey of the labor market suggests the U.S. economy added 2.7 million jobs over the year ending February. Another says it added less than half that. The difficulty accounting for an influx of immigrant workers could explain this disconnect, says Nick Timrose. Yes, I think so. That's the conclusion that I've been making about this, the jobs data. Did you know that it costs as little as 3 cents per ad click on this platform? Wow, that's a steal. Okay, now I gotta come over here because is there something at 10 today? There is not. Gotta remember again today. We had a meeting yesterday. They moved it to today. I need to make sure that I'm paying attention. Oh, is it a little bit earlier? $7:30, yes. I'll tell Chuck to come and yell at me in chat if I forget. well, we have had it fold back on itself a little bit. Treasury, I find this behavior in the Treasury so fascinating that, like, it'll just go and go and go and go straight line and then come back, right? Like, it's, E-mini is go, but Treasuries, it's often a straight line, right? You'll get these moves where it just goes and goes and goes, and you don't get even like one tick backwards, right? But that was 4 ticks, so that's probably enough for us to call it like a pivot. That doesn't mean that the bullishness for the day is over, but it does mean that that's probably the end of that leg, right? So we'll call that leg 1. We'll see if we get a leg 2 or if they reverse. At the moment, so now is the time where if somebody really, really disagreed with this move, or like it was just a stop run where, that guy would be coming in. Like if I really wanted to short it right now, I would be pushing it in. I would be pushing it the other way because I know that this liquidity down here is going to be weak. But we're not seeing that. The volume is just kind of chilling. It's like the guy that needed to bought, and now it's settling. So that, I think, I don't think we know what was the cause of this meta order. I don't know if it was a momentum trade stopping out or just some other larger call. It sure does seem disconnected from the data that we got, though. And the S&P 500, super happy about it too. Well, one thing that I should note in here about the initial jobless claims, okay, is that it was slightly higher than expected. It's only slightly higher than expected and largest in some time. I don't know how long it's been, but actually, can we get this one right here? In real world labor market, 2024 has seen many layoffs. You list all of these companies. But according to the government supply data, the number of Americans filing for jobless benefits for the first time last week rose 212 to 221, its highest since January, and claims ticked modestly higher on an NSA basis. Texas and Missouri saw their largest declines in claims, while California and Pennsylvania saw the largest. Continuing claims remain glued around 1.8 million Americans, where they have been for 9 months. But here's the thing, warns are soaring. The Challenger Gray just announced that March saw the most job cuts since January 2023, but government supply data on initial jobless claims continues to smoothly tick along near record lows. Your BLS, you're going to have to rig state level warn data next because it's, well, diverging. So Zero Hedge's story is just the conspiracy theory about it. But it could be that. Like, I don't know, man. So when you get this kind of a situation, the market expects interest rates to decline. They rally. Okay, but in order for interest rates to decline, I think that the economy has to be like on the edge of falling into a recession quickly, sort of a thing. Like you can't have a market that's as crazy and bullish as it was like last week and raise interest rates. I just don't think that that's going to work. Now, all of the sudden, based off of 1 or 2 data points, they're rallying. Like let's take it from this perspective. Let's come back to this chart over here. So yesterday, when was it? Right here. Okay. So yesterday, when we were at around 52.25, okay, somewhere around 52.25 was when we had that PMI data. So between the PMI data, the Federal Reserve comments that we've had, initial jobless claims, and trade balance, that's worth basically an 80-point rally in the S&P 500. This move right here seems to go. This move right here seems to coincide with the move in the Japanese yen and the move in the dollar. So let's make a note of that too. It may be currency driven as well. So I think I've kind of got three theories here now, right? One is that they are reacting to the news. One is that they are this is kind of like leftovers from yesterday. One theory is that this is momentum traders stopping out in the ZN. And another theory is that it's currency driven. So I've got like 4 theories. I'm not 100% sure why this move came through. But it was one of the strongest flows we've seen all year, wasn't it? Remember yesterday because it was going down really hard and we're like, oh wow. But yeah, let me tell you what, when it's like panic buy, that's some of the most spectacular stuff you'll see. It was pretty spectacular on the upside here today, wasn't it? And it only means that, like, here's the crazy thing about this all, right? Is that the biggest data point is the non-farms tomorrow. And either way that non-farms goes tomorrow, it's going to be a wild ride, probably. And you gotta be careful too, because non-farms often does unconventional weird things, right? So it could come in and non-farms is super, super weak, less than expected, and this market's just gonna take off. But like it could just take off and then like have a really, really ugly pullback or something. You know, you could have it come out and the numbers be really, really strong and see equities and treasuries rally anyways, because why not? It might not make sense. And the more volatile that things are already, the kind of the more likely for us to see bizarre, nonsensical things like that is, right? Another 150K above estimates like a few months ago would really shake it. Well, every single one for the last like 6 have been pretty big divergences from the estimates. Non-farms is a very difficult number to predict, but the variances that we've been seeing lately are just crazy. Just crazy. And like that's the other side of it, is that okay, there's tons of volatility, and then the non-farms is probably going to be a crazy number too. Probably the craziest thing that could happen would be for that number to come in line with expectations tomorrow. That would probably be the craziest thing that could happen. The least expected for me. Because that's just the way it's been. Well, one thing I think I want to keep an eye on. The market seems to be rallying because they think economic weakness is coming in that will cause treasury yields to come down, right? But some of these other markets are really moving up, and so I kind of want to keep an eye on gold here. Why? I don't know why sometimes my pen screws up like that, but anyways, you know, if gold thinks that we're going to get another bout of inflation and the yields aren't going to reflect that, then you're going to see gold jump. You've also been seeing the speculation in Bitcoin. Well, right now I'm not seeing it in gold, but I am seeing it in Bitcoin. So that's worth noting. See a crash out of that wouldn't be surprising. Well, they've kind of come back up a little bit. Just a little. Just a little. Now that reminds me, I bought a router on eBay the other day, but it was from a seller that was new, so there's like a little bit of risk in that. And I haven't gotten any emails. Have I gotten anything from it? Or update. Hey, I'm not expected to get it until next Thursday. Ooh, 7 days? No way. No way. Where's it coming from? Oh, it might be better than that. They're only just barely getting the number, so. Cool. Do you ever do this thing where, like, you make a password and you use that password every day to the point where, you know, you just start typing, and then one day you start thinking about what you're typing and you're like, wait, was this letter or this letter capitalized? And all of a sudden you can't remember which one it is. And so then you rely on your muscle memory, and then you go, oh, yes, okay, it was this one. Yes, that's happened to me. Isn't it the weirdest thing? I tell you what. Okay, that looks like that's in good working order. Had to order a new card because you forgot your bank PIN. Oh my gosh. That reminds me, this whole week I have a card, and I don't understand this. Explain this to me. My card, if I try and do the insert, so that it reads the chip, it doesn't take it. Like the chip is broken. But if I tap the card, it still works. What's with that? How does that work? I need to go get that card replaced. Okay, so I think that's all in order here. This is boring now. The market definitely died down, didn't it? I'm sure that there's plenty more twists and turns left in this session. This has kind of been the way that it's been late this whole week, right? Is you got an initial move, it kind of slows down, and then like maybe after the S&P 500 opens, gets going. I'm going to mute myself here in a bit. Because I'm going to show somebody an application that we're working on. Yes, just moving on wax stuff. Well, the treasuries are kind of hinting to you like there could be another leg. Oh, I just came across the controversial thread. There's a subreddit on Reddit called Gaming Circle Jerk, which is where like all of the liberal gaming people hang out. And there's been this game called Stellar Blade that's been generating a lot of controversy because the main character is hot and wears scantily, revealing outfits rather. And so somebody in the subreddit said, can we stop trying to tear down this awesome game? Yada, yada, yada. I'm sure that we will have a very reasoned and normal discussion over there on Reddit in that one. Oh, hey, the 5-year bumped out there. Dude, the spread is really shifting here. The spread is really flattening out. Look at on like our 30-minute chart. Look at how much the spread has changed. It changed a lot 2 days ago too, though. On Tuesday, it changed a lot on Tuesday. Okay, so I am going to mute myself here now. I will be back. All right. I'll still be watching chat here. Oh, there you go. There is another leg.
Block sell.
All right, I am back. Not much. Okay, so you guys have all been quiet here. That's okay. I am a little weirded out by some of the things the market has done here while I've been away, actually. Then coming back to the chart, I can see that there was another leg. They got to 10. It was a lot stronger in ZB, so there was more flattening. More flattening, and SPOOs are kind of like, since the open, giving back their gains. Well, we still got an hour of action, so let's just see how it goes, I guess. There was a black sell earlier at the top on ZN. You know, I didn't hear that. Let's see. Well, there was at 110.00 half. There was a 4K. Okay, we're going to be getting comments from Feds Harker here. So let me tell you about large orders. I have a video in my order flow video series about large orders, but you know, I want to try and make it a little bit more relevant to what's going on right now. The key thing with large orders is that people notice them, right? When a black order comes through, like we're looking for it, the whole market sees it when that happens. So if you're a really large player that can throw out a 4,000 lot order on there, right? You don't want to do something like that unless you're okay with everybody in the market seeing it, right? Which means that it kind of either becomes like you're okay with everybody seeing it because it doesn't matter anymore. Like for instance, you're trying to fill a large order and then you're almost done and you only need 4,000 more and you just dump the last 4,000 and then you're done. So now it doesn't matter what the market does after that because you've already filled, right? But I think that what is more common sometimes is they're throwing that one out there because they kind of, their hand is forced or whatever, like they're panicking and getting out the rest of it or something like that. That can also happen. But because you're like filling so much liquidity there, they do tend to create these volume nodes. They tend to create these liquidity holes where price gets stuck. And I think that you can kind of see that. At 110 even, I think it was a little bit more that like there was just a little bit of impulsive action here when it was breaking those highs, and all of that excitement got it stuck, right? So that's kind of what I would say is happening here is, yeah, you had a big order there. They came back a little bit, but it's kind of making it stuck, right? There is less latent liquidity in this area between 31 and 110 even. There's less latent liquidity there than there is below that and above that. And so it kind of gets stuck in this range. So I think that we'll probably be a little bit range bound for a while longer. I don't know if they'll wait the whole 45 minutes if they go for another leg. But any thoughts on ES? This last week or two, it's been moving very strange to me. Such large movements overnight, even when Asia/Europe is closed. Well, so you do tend to see a lot of moves overnight, though. In part because there's just less liquidity, so it's easier to move it during those times. Then just balance during RTH when the underlying stocks are actually trading such big moves when normally they'd wait for news release. Yeah. So I think that a lot of what you're seeing is just there's less liquidity overnight, and so that kind of makes it a little bit more free to move overnight sometimes. But I would also say, we've had some really big moves in the S&P 500 this week. I mean, it's kind of, we don't necessarily think of it like that because a lot of it was down and then going back up. So it's like the larger picture, it's been trading in a range. But from like a day trading picture, I mean, good grief. This move, we've moved the past 2 days like 75 points. That's a lot. It's a lot. So basically normal end of quarter rebalancing. Well, I think that the rebalancing should have been done last week. What you're seeing this week is probably more people kind of shifting around and positioning themselves for the non-farms tomorrow. That's the big one tomorrow that, and some people, big guys, they need to hedge against that and might take positions to hedge that. So that's maybe some of it. I also think that you're seeing a lot of momentum strategies doing stuff right now. Like a lot of markets are in trends right now. So the momentum funds are probably like, tearing their hair out right now. Going left and right, managing positions all over the place because gold is trending up, oil is trending up. From some perspectives, the S&P 500 is trending up. The treasuries started to trend down, but then almost as soon as they started to trend down and you got the signals, it flipped back on them. So there's just a lot of money moving around right now all of a sudden, isn't there? Like the size on ZN, we've been more like 2,000 to 3,000 contracts for a long time. Now in April, it's been pretty consistently 4,000 to 5,000 contracts. So the market is just more active. There's more people involved. Oh yes. Well, interesting that they're back to this 30 where there was a really, really big 8,700 lot iceberg on the offer. And it's looking like it's going to be 8,700 contracts bid iceberg now. Bitcoin is chilling out a little bit and gold is popping off. There's got to be some big macro plays being put on here, man. What's BT? So Bitcoin has chilled out a little bit. They're just below 67,800. 67,800. They had a little bit of a rise. It wasn't anything too crazy. I'd say it doesn't look like anything compared to the run that I'm seeing in oil now all of a sudden. Because oil just jumped up $10 out of nowhere. Or sorry, did I say oil? Gold. Gold just jumped $10 out of nowhere. Oil is oil's not doing anything too interesting yet. It was like CL at 100. No. I'm super curious to see where oil is going. I'm not sure I can call that one. A Honda Civic ain't gonna cut it for me now. I remember like last time this happened, I was like, I just don't want to have a gas vehicle anymore. Let's go to electricity. But I don't think that electricity solves that problem. So it kind of feels like that the real solution here is to just not drive. And hey, you know what? I've been doing pretty good with that the last 4 years. Been doing pretty good with that the last few years. I used to have to fill my gas tank up like every week, if not twice a week, and now I maybe do it like once every other month. You do have a Civic? I saw this car. I couldn't find it again. So have you watched the new the F1 movie on Netflix where the guy is it F1? It's not F1, but you know the guy he plays it's the Gran Turismo movie on Netflix, right? He plays Gran Turismo and then he gets a chance to become a driver and he's successful with it and whatnot, right? So at the end of that movie, then they have, like in the rolling credits, they just show, you know, artsy video footage of cool cars. And the first one that they show is this Honda. And it looks like a Civic, but it's like a really angry Civic or something like that. And I haven't been able to figure out what that was. But I thought it was so cool looking. That coupe Civic? I don't know. It was like let's come over to Honda's website, huh? It was like a Honda. It was like a sports. It was. I mean, it was a sports car. I mean, we're talking about a racing show, right? Cars, sedans. Civic SI, Civic Type R. I don't think it was a Type R though. Future. Do they not even have a coupe anymore? I guess that wouldn't surprise me. The Civic Type R ain't bad looking, though. But it wasn't the Civic Type R. It was way... What's the latest NSX that they have? ...2021 NSX Type S. Images, please. No, that's not what it... I don't think that's it. No. You've got the same Type R, but not the engine. Let's see if I can do it. Gran Turismo movie cars in end credits. There's no post credit scene. cars featured, maybe? All the cars in the Gran Turismo movie and how likely they are to come to the game. Uh-huh. Nissan GTR. Did you see this thing? I saw a story yesterday that the Toyota Supra is selling super bad. I think some people, it's because it's like actually a BMW engine and they don't like that for some reason. But other people are saying it's just too expensive. But the Nissan GTR, which Nissan doesn't have a very good reputation right now. I wasn't always like this, but Nissan has kind of become like the trashy brand for whatever reason. But then the GTR is outselling it. Oh man! Oh no! Background cars. Oh, that's funny because it was in the end credits. It's like the first car you see in the end credits. Well, now you're all gonna want to go back and watch it and you'll be like, oh, okay, yeah, I know what that is. Supra lost love with the new model because yes, BMW, a Supra starting up even says BMW on the radio, or at least they did for a while. People hated that, and I agree with people because you want it to be a Toyota. You don't want it to be a BMW. Yeah. I totally get it. I don't think that that's the only reason, though. That can't be the only reason. I think part of it is also the price. I think part of it is also that the kind of person that wants a Toyota doesn't necessarily want a sports car, right? The GTR love kind of slimmered down. Well, the Skyline. Like, there's that GTR, but then there's also, like, the newer Skyline. Is it? No, what is it? This one. That one is so sick. You developed new divergence indicators. So when you're talking about divergence, are you talking order flow? So if you're backtesting it like order flow and using tick replay data, I have found those to not be very accurate. Plus, you can only get like 1 year's worth of data, so you can't test it against enough data to know. Because every time that I've created an indicator, a strategy like that, and then tried running it, it immediately does not run the same live as it did in the backtest. You don't seem to get many of them 2 to 3 times a week. Does it work? Well, yeah, I mean, the thing is, like, can you backtest it over 5 years? That's probably going to be your biggest. It's going to be, like, your biggest problem. You're on Sierra, you're using Teton tick by tick replay with premium package. I could if I got that kind of time, but I tried till 21, basically wanted to cover down cycle. You got it till 2021, and what is the data that it's using? Purely price data? So let me go back to something I was talking about earlier, right? The platform doesn't actually know if an order is buy or sell. It's not like the piece of data comes in and it says there was a volume here and it was by volume and It doesn't work like that. It just says there was volume at this price. Because from their perspective, from the data perspective, right, there's a buy and a sell there, right? So they just call it volume. But I want to know, who was the aggressor? Was the market order a buy or a sell? So how do I do that? I have to aggregate two different data feeds. One data feed is the order matches, and the other data feed is the level 2. Right? So, something that can happen is your level 2 and your matches feed can be out of sync slightly. Or like how they're synced up on my client might be slightly different from your client. Like there might be milliseconds of differences, and that could result in some orders being categorized differently. Okay. And the more illiquid your market is, the more significant that effect is. Okay. I have found that if you're doing it on like a slippery market, that it can be like as high as 10% difference. Okay. So if you've got this strategy that's like when there's a divergence of X thousand contracts, right? That sort of a thing is very significant, because that could be the difference between your algorithm takes an order entry here or it takes an entry here, for instance. Okay, so that's a problem. But when you're back testing, it's an even bigger problem, because you have the data as it's recorded, what the level 2 and the matches were showing you at the time. I have found that the historical data tends to be even more off-jointed. So if I was coming in here just with my regular cumulative deltas and it was a difference of like 10%, then when I go and I use it on data with historical bid offer, it's even more inaccurate. It's like 20% inaccurate. And so then, again, the strategy takes different entries live than it did historically. It's actually based on tracing previous bars. Wait, I don't understand what you mean by that. On the DOM that you have, you see the offer and the bid. You also see the number which order was filled. Was the offer accepted or the bid accepted? Yes. So I can come in here and can see the best bid is 30.5 and the best offer is 31. So if volume is reported at 31, then I know that it was market buy volume, right? The problem is, what if it just ticked up? What if it ticks up and down and it flickers really quickly? You ever seen that? Where, you know, like there's buy and sell volume going in at the same time, and it kind of flickers back and forth. Now what happens is the difference between when the level 2 is changing and where the volume comes in at is going to determine whether that volume at 31 was buy or sell volume. See what I mean? So it can miscategorize volume. So that's the issue with backtesting volume, is that the historical data for that is not accurate enough for good backtests, unless you collect the data yourself when you're doing it live. Okay. Now, if all it's doing, you said it's based on tracing previous bars. So if all you're doing is using past price data, that's a different issue. Would be very, very difficult. It's very, very difficult to find a really good strategy, like a day trading strategy, that is effective with that. Okay. I would want to backtest it 5 years. So you said you went back to 2021. That's 3 years. That's not terrible. But in that instance, the big thing that I would be concerned about is that you're overfitting your model. You are, you have different variables within the strategy, and you're testing the different ones to see which ones work best. And they fit to the past market data, but then it's just random. And so it doesn't work for the data going forward, right? So the first thing is try and backtest it on 5 years worth of data, different market types. You can try testing it on different instruments potentially too, if that makes sense for that indicator. And then the next thing that you got to do is you've got to try it live on sim. So I don't know how it works in CR charts, but in NinjaTrader, I can come in and I can create a strategy and I can tell the strategy to run live, but to a live data, not a live account. It would trade as though it was trading live, but it trades it in a sim account, right? And I would do that probably for at least a month. And at the end of every day, go in and say, okay, here are the trades that it actually took live, and then run the back test on just that one day and say, oh, okay, here are the entries that it says that it would have made on sim. Are they the same? Are they exactly the same? Does the live one take the orders in the same place that the back test one does? To see how accurate your back test actually was. Because oftentimes you find out that they're just not, right? Like, for instance, we were talking about that the other day, right? Where we found in NinjaTrader, if your strategy is taking entries outside of the on bar closed method, then that can kind of screw the back tester up and give you inaccurate fills. So then the real life performance isn't anything like what the back test would say, right?
Block sell.
You don't have to know. I was asking me a bunch of questions here. Hold on a second. Yeah. Well, the reason I was giving that specific example was because your description of the strategy sounded like it was an order flow strategy. And so if you're going to do an backtest an order flow strategy, like that's the whole thing. I think that there are probably more intraday signals available for retail traders to make that would be based on a read of the order flow. The reason for that is because the tools are not up to par. So if you're able to take the effort to like record the data yourself and do all of the analysis yourself and have tools that are actually accurate, then you would be able to take advantage of those edges that like the rest of the retail space can't. But you have to overcome that challenge, right? The data that your provider gives you is not good enough for order flow backtesting. Right. Sometimes I notice it gives signals way out of context, but within the data range, so I don't know a way to add context. And I can use some moving averages. Well, yeah, I can't. Yeah, you can't do that. But yeah, that's another big thing though that you have to look out for is like, especially. So one of the things that NinjaTrader has when you backtest a strategy is it has this probability thing. And what the probability is doing is it's saying, okay, when you win, how much do you win? And like, how consistent is that? And it's basically using that to try and determine how likely is it that this strategy is actually picking up on something real rather than it's just kind of luck. Because if the strategy only made money on like one trade, but that one trade was like all of the profits, how do you know that it was actually like a real good strategy versus they just got lucky? You can't know that, right? Because that one trade is like too big of a bit of the profits, right? Well, where would a trade like that come from? You happen to be in when some sort of big news event happened or something like that. So now if you are optimizing parameters, right? Your parameter optimizations are going to optimize around the trades that were in news and maybe had absolutely nothing to do with the edge that you were looking for. So now you're overfitting on that data, and then thus going forward, because it was all random, the parameters that you selected, there's no telling how it's actually going to perform in the future, but it usually doesn't perform as well. So that's the key thing is before you take anything live, I would recommend running it against a sim count on live data for a month and verifying all of the trades by hand to verify that how accurate your backtest actually was. If it passes that, then you can start it trading small. Okay. So you don't have to know. Where do you work now? I work for a company that makes customer relationship management software for sales companies. And I do site reliability engineering for them in cloud. Why do you backtest 5 years? You day trade. Well, because 5 years is the amount of data that you need to be able to verify a strategy, generally speaking. So there's kind of two things about this. One is that you want your strategy to be able to work in different kinds of markets, right? Now, maybe you have something that is like you have 5 different strategies and it switches between them based on the market conditions that it's seeing. Okay, but you need it to be able to survive these different kinds of market conditions. So 5 years is usually the amount of time that you need for like the market is not very efficient in the short run, but it is pretty efficient once you get to a 3 to 5 year time period. Okay, so that's why you want 5 years there on that. Is you're going to have a wide enough variety of markets to verify the strategy with 5 years. The second thing, though, is that the market has fat tails, and you have to account for the fat tails. And that's I think a lot of day traders think, oh, that doesn't apply to me because I have a set stop and target. So I'm never going to have one position that like goes too crazy. But there are still tails because there's going to be a tail where you take the trade like 10 times and it loses 10 times in a row. And that would be the tail, right? Now, tails, by their very definition, are rare events. They don't happen very long. And so in order to have an accurate backtest, you have to have enough of those tail events to have statistical significance. So like if it's a Gaussian distribution, you only need about 50 data samples to know what the distribution is, right? But if it is a distribution with kurtosis with really long tails, well, then what you're going to need is like you're going to need like 50 tail events, right? Which means that actually the number of trades that you have overall, it's exponential. You're going to need thousands, if not tens of thousands of trades to be able to verify it. So if I'm doing just like a standard day trading strategy that maybe takes, 1 to 3 trades per day sort of a thing over 5 years, that usually gives you enough data samples to give you some confidence in the strategy working forward. And then on top of that, you do the verification step that I talked about where you are testing it against the live data, right? To verify that the backtest is pretty accurate to what happens in the real world. And then when you start trading the strategy, start small and size up. And if the strategy stops performing, scale back because maybe you scaled up too quickly. Maybe the market is sniffing you out and you need to reduce the amount that you're putting in. So that's why 5 years. So it just kind of happens that 5 years is the magic number that gives you enough data samples. And in the professional world, you're like running a fund or something. People are going to want, like, even if you haven't started yet, they're going to want to see like what is the 5 year theoretical returns. Let's see here. Did you make money and then come to trading, then develop your technical skills, or did you study trading / develop technical skills and then found profitability? I'm having a hard time wrapping my head around what your 2 options are, but here's what happened. I was a computer science guy. I was going to go into making video games. I realized at the end of my university career that working in the video game industry really, really sucks. I am super glad that I didn't do it because I had friends from school that they went into like working for Blizzard and things like that. They did what they wanted to do, but it sucked working there. That the industry just sucks you dry. It's terrible. And then I developed an interest in finance. So I went and I worked at one of the big banks for several years, about 6 years. And then when I left the bank, I started trading. So I had like these technical skills, right? I've always been a big computer guy since I was a little kid. So I had kind of all of the computer skills. Then I had the interest in finance later. And then because of what I knew at the bank that I worked at and help from you guys kind of pointing out certain studies, certain good information, etc., kind of correlating that all together, then we were able to find empirical data about the markets that explains really well and gives a good framework for how the market works so that we can avoid some of the bigger pitfalls for day traders. Now, as far as profitability goes, I would say that it's still kind of on and off. So, like, to me, when you want to call yourself a profitable trader, that's like what really matters is like your full lifetime, right? Like you trade your whole life and then you die and we see how well you did over your whole lifetime. And then, we can look at your results and say if it was really profitable, if there was really something to it or not, right? Okay. Like Charlie Munger, he's dead now. We're going to have the conference soon. Everybody get together. They put their vote on a slip. They put it into a fire. And then depending on the color of the smoke, then we canonize Charlie Munger as a profitable trader, right? Okay. But until then, I don't like, it drives me nuts when people call themselves individually profitable or not. It's like, over what time frame? Okay, well, the standard that I just set was 5 years, right? I said, if I'm doing a backtest, I want 5 years of results. Well, I would not say that I'm profitable over 5 years, at least not with the scalping futures. I think when you factor in all of the investing and everything that I do, especially like larger financial transactions like buying a house and which jobs you decide to take and things like that, then it definitely is profitable. But just the scalping itself, I would say over 5 years, it's not. I've had years in there where it was profitable, but it's really rough. And I will tend to go through, because of the way that I trade, profitability really has to be measured against the market that you're trading, right? Some markets I understand really well, and some markets I don't understand very well. I don't think that I understood the market in January very well. I did very poorly in January. I seem to understand this market pretty well. I've been really, really light with it, but we've taken some pretty good trades this week. Actually, it's pretty crazy to me. But did the last live trade I took was last week. But I have taken some sim trades this week, and I think that I'm like 4 for 4 so far this week, which is pretty crazy considering how volatile it has been, right? But I would rather kind of let the volatility pass before I start putting my account at risk. So, and the big thing is, and I'm trying to present a different, like, when you come in and you listen to me, you should be getting this idea that Seth's approach and what he says is different from everybody else that's out there, right? Because everybody else that's out there is saying, here's this strategy, it's a great strategy, you should trade it too. I'm not saying that. I do what I do. It's very discretionary. Sometimes I understand the market, sometimes I don't. When you listen to me on things, it should be because I am presenting to you empirical evidence. I'm not just saying, oh, the market tends to do X because that's just what I've seen. No, I'm saying there's some paper out there that I've read that suggests that the market does this. Now, can you take that information and turn it into your own profitable strategy? That's up to you. Because I'm not giving you the strategy. I'm giving you the information that you need to craft the strategy yourself. Right? Gaming, many friends left the industry and hated it, but yes, it's surprising how much you can understand the market and can still... wait, am I missing a word there? And can still maintain restraint, yeah. Well, you know, for me, okay, when I started early on, I had many cases where like I'd be doing really well, and then I'd give it all up in a day. And it would be like, why did I take so many trades? Why did I mess with this market at all? I was clearly on tilt, etc. Part of it now is that I've realized that some of the strategies and some of the things that we do as retail traders are actually really prone to that. That we like to set ourselves up so that we win most of the time. And so then when you're not winning, you are not used to dealing with it. And so you don't deal with it very well and you just blow up every time, right? So I started to realize that and shifted things, right? I started to take more explicitly like equal risk reward so that my win rate should be close to 50%. I'm way more cautious about if I'm on a losing streak, I stop a lot earlier, that sort of thing, right? And when you've been doing it that long, it kind of loses that hold that it has on you, right? So because like, you know, your brain, it loves the tense, it loves the anticipation. Are you going to make money? Are you not? I mean, this is why people get addicted to gambling, right? You get addicted to trading in the same way that you get addicted to gambling. And once you've been doing it long enough, it just kind of wears off and it doesn't affect you as much, right? Now, when I'm in a trade, it's still super tense. I still get incredibly nervous. But I don't think I become addicted to it, you know? Like, it's a lot easier these days for me to come in and like this move today. It was a big move up. It was a great opportunity. It was not an opportunity that I saw. So I just sat and watched it and enjoyed watching it. And I enjoy just seeing it. I don't have to take a trade to be happy anymore. You know what I mean? I don't like it when I should have taken a trade and I didn't because I don't feel like I'm trading my strategy. So I will hate it when I don't feel like I'm performing the way that I should. But I know that if I miss a trade, that there's going to be a trade next month. That the market will still be here. You know what I mean? And that makes it so much easier to remain restrained. Because most retail traders, frankly, overtrade. Most retail traders overtrade. I might take these days, I might take 1 to 3 trades a week because that's just the number of opportunities that I see. And whereas you got a lot of these retail guys out there that they're taking like 20 trades a day. Well, I kind of question what kind of an edge you have where you're actually getting 20 really good setups a day, but maybe they really got some. Yeah, I already know that from what I see, you take the number of trades that makes me think that you'd be overtrading. It kind of brings me back to the momentum thing. So momentum is a strategy where there are technical setups for it, but the magic is not really in the technical setup. The magic is really in the portfolio construction. So if you have a portfolio of a bunch of assets that have a tendency to trend, but are highly uncorrelated, then when you go in and you take a certain signal, anytime that happens in any of those things, then this certain expectancy emerges where you don't win most of the time, but when you do win, you get really, really huge winners. And those winners are so big that you're profitable and they are very well profitable, right? Like they will beat the S&P 500, right? You're only able to do that because you're looking at all of these different instruments and you're taking every trade. That's not what we do as retail traders, is it? As retail traders, we come in and we're like, okay, here's what I've got. I can see this technical pattern and this technical pattern, and if I combine them all together, I think that that means that we're going to move up or down or whatever it is, and so then you take the trade, right? So if you're trying to do technical analysis, but you're basically you're making the mistake of particularizing the general, right? If you have an edge, and that edge is in general, X thing tends to happen 60% of the time, then in order to realize profits off of that strategy, you will have to take that trade every time it happens. Which is why we come back to the other side, which is I want to take a trade when there is a clear imbalance between buyers and sellers that I am able to anticipate. Okay. There's a trend is going to be caused, and I know why they're going to do it before it happens. Or as it happens, so that I can get into it early. Right? That's not going to happen every day. It's just not going to happen every day. And there can be situations where, like, I kind of have it, but there's other things going on that I don't like about it. So I just pass up on it. I'm super picky. Right? And I think for what retail traders are trying to do, that makes a lot more sense. I don't trade all days anymore as well. No news, nothing. I just like raw market on raw mechanics. And when I smell some wacky things, I do what I'm doing now. I engage in YouTuber. Yeah. There really is like, you know, the way that it worked in the pits. Hold on a second. I'm going to restart this tab over here because it's doing weird stuff. You're still with me here on YouTube, right? Because my YouTube screen was like giving me a loading sign for some reason. I think we're okay. Anyways, in when it was floor trading, what would happen is everybody would just be sitting there like nothing's going on. Nobody's really doing anything or trading, right? Then one of the big firms like Goldman or whatever gets a call, right? They go up to the post, they start calling, they're coming back, they're writing something down. Then the pit would light up because people know that a big whale is coming in and needs to do a transaction, and they're all starting to trade. And so now they're all trying to guess, okay, why did he get the call? Why would they be doing something now? Is it a buy or is it a sell? And so now they're all speculating on what's going to happen, and the pit lights up, right? So this is the same thing here today. You can't hear them, but you can see it. You can see the limit orders changing and how many limit orders are being placed and stuff. They kind of understand, I think, that like the volume has died out a little bit. I guess they had a pretty good fall back here to 26 though. I kind of wonder if they're not able to get back to 24 again. In fact, let's clear this inside column here. But we're at kind of like a key balancing location based on the market maker's average positions, and we're at the value area low. So this is an area that they may want to build a little bit of volume at and hang out at. I should have shorted the market. The fact that I typed it in chat made a solid plan with stuff, but I didn't feel like it. Well, you're talking about ES or ZN now? So, or you think you're talking ES? I don't know if the short in ES was worth it. Because here you had like a 10, 20 point up move, and now it's come back like 5. And if you made money on the 5, was that really that great of a trade? I mean, I don't know. It depends on what you're going for. But I would rather have known that this buy was going to come, been out and taken it and already be out, right? Yeah. I don't want to trade this move in any way. It's like cocaine. Once you start doing it, you get addicted to those 4-point flush and really is. And it really does help to have like a stream and a community to talk to for everybody to be like, yeah, this isn't worth trading right now, right? That really helps you moderate yourself a lot. People will often say, like, how do you do it? You're talking and you're taking trades at the same time and everything. But we've been doing it so long, I find that it helps me. If I didn't have the stream to talk to, I think I would probably still just talk to myself. That would be kind of weird. I'm just in the room talking to, and I know that I'm the only person that ever hears it, but I would probably do that because I feel like that the talking helps me. One of the things that the talking does is it can kind of get you into a little bit more of the slow systems approach, using the logical parts of your brain that help you make better decisions. And talking can get certain brain chemicals going and so forth to keep you in a good trading mood. Because when you get a couple of losses in a row, man, it's your thinking gets impaired. It just does. It's unavoidable. You're not getting the chemical feedback that your brain wants. It pisses the brain off, and the brain starts to throw a temper tantrum. And then every decision, the neurons aren't firing as efficiently. So everything that you do and think after that is weakened, essentially. Is what is the word? Compromised. Is compromised. Obsidian, welcome. A little late today, but we're still glad to have you. You don't have to know. So basically, you try to find high probability trades. Yes. Yes. Now the caveat to that is that if I'm trading well, my hit rate will be around 50%. So what I want to do is I want to have a 50% win rate, but with winners that are larger than my losers. That's what I go for. But I think of it as high probability. The thing is that the setups that I take are not setups that you can backtest or like track, right? Because the strategy, the setup, is going to be different every day based on what flows I see out there and whether or not I see an imbalance in those flows. So we can't really track it statistically. But I say a high probability, which is that I want to have, so let's not say high probability, but high confidence trades, right? I want to have high confidence that I am seeing something that I'm very confident is going to bring buyers or sellers in. Right? This is why, for instance, I'm saying, like, I don't think I'm going to take trade during NonFarms tomorrow. I think there's going to be a lot of volatility. I think that even if there is like a really clear takeaway from that NonFarms number, that the market might contradict it and do something completely different anyways. It's not a high confidence setup for me because of the randomness involved, right? I've got to be like, they are going to want to buy it. There's going to be these people, they need to buy it, and I can see it happening. I can see it happening, and then I'm going to take it. I feel when I trade totally silent, it's either I make bank or I flush. Trading while engaging, it takes out the element of FOMO, as in if you are engaging in conversation and move is happening, you don't feel the urge to get into the trade at the worst entry and stuff, because I personally feel I'm doing it right now, so I'll check. Yeah. That's one of the don't do it on economic data days or pal days. Yeah. Oh, wait, you're talking about something else. Selling 0 day to expiration SPX strangles that encompasses a 1% daily move, as we know according to historical data, is the SPX's average daily move. Don't do it on economic days or pal days. Yeah, there you go. It's kind of funny to me to see the people on Reddit starting to talk about 0 day to expiration options, because that just does not seem like a good place for a retail trader to play, but they're doing it. Some people are having success. That's the big market. Someday, I hope the big market will be the treasury market, and everybody will want to talk to me, but until then. I saw some option guy back testing. Yeah, well, yeah, that's. But how much do you lose when that breaks, right? Like if you go and you look back at there was like at the beginning of the year, I think it was, there was a day where we were like up or down 2%, right? So when the NASDAQ is down 2%, how much do you lose on those options? Right? Because you're selling them, so the losses are potentially unlimited. Those kinds of strategies are, it's kind of a deceptive thing because they have fat tails, right? And the fat tail is so big that you really actually have to have a really large account to really do those properly, right? Yeah, hopefully if that's happening, you just puke it. For sure. But that's the thing is I don't really want myself to be I want to be winning on the fat tails. That's the way that I think of it. I want to be, 50-50, and then every once in a while there's a tail, and that tail is you make a ton of money on that tail. That's what I want. I saw that post too. I'm not sure I saw that one. I had this on Reddit the other day because somebody was saying, well, they were talking about price action, and we're like, well, yeah, but like, are you saying that there's like nothing to any of the strategies? Because clearly it works. And I'm like, no, it doesn't work. Because first of all, you're here complaining that it doesn't work. But you seem to think that other people think that it works. How do you know that they aren't lying to you? And how do you know that they're not just being fooled by randomness? That like, yeah, they did make money, but there's not enough data samples for them to prove that it's actually, profitable. And then tomorrow they're going to blow their account, because that's what usually happens, right? And then this guy came in and was like, well, you're being fooled by randomness too. And I'm like, well, I didn't make any claim about a strategy. So like, what are you going on about? You're assuming, you're arguing with somebody else. You're arguing with some random caricature of a person on the internet that you've concocted in your head. You haven't watched my content. You don't know what I'm doing. And so you assume that it's the same thing. And it was like the weirdest conversation. This keeps happening to me on Reddit. This is where I keep coming back to, like, are these real people? Like, how much of this activity with people that, like, where people are actually responding to me on Reddit is actually with real people? Because far too often I get responses that just do not match up with what I was saying. It's like they're arguing with somebody else, but they're responding to my comment all the time. But that's like the constant. It's so funny because the whole thing is the idea that you would need tens of thousands of trades to verify that a strategy is profitable. I don't think that there's a human in existence that their natural inclination was to say that. Right? Our brain works a different way. It works on normal data. Our brain works on 50 to 200 things and see what the trend is in that. 10,000, we can't even fathom. Well, they recovered a little bit of those losses. What they did not get back to that 24 area. I've got about 2 minutes before I should get going. So, yeah. Tomorrow I'm okay with just sitting on it today. I had that meeting and everything too. So, today wasn't going to be very good for trades anyways. I think that next week could be a little bit better for us too. I mean, you're going to have CPIs coming up and there's going to be some opportunities, but it hopefully will not be quite as insane and volatile and uncertain as it is right now. So tomorrow, it's going to be a big day though. Tomorrow's going to be a big day. So I'll see you guys then. In the meantime, stay excellent.